Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Gravita India Limited, and let's understand when the share will turn around and what has happened to the share that it's down over 80%. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Now about Gravita India, it was established in 1992 and they manufacture different types of lead products or lead ancillary products. So they provide all sorts of furnished lead for the manufacturing companies, say in tires or plastics or in other goods and materials across India and across the globe. They are also into international trade of non-ferrous metal products, so not only lead but other non-ferrous products. They also trade, like they import export these products, so that is a different division that Gravita India currently has. They supply to major multinational companies in India and abroad, as I mentioned, into different domains where lead is very important, you could say, a raw material, be it batteries even, or other materials in which lead is required. The market cap of the company has shrunk to around 300 crores, but at one point of time, its market cap was around 1500 crores. So one has to understand that there have been a total wealth destruction in the stock, and I'll try to enumerate as to why that has happened. But first of all, looking at the financials of the company, the sales were up 13% in this quarter compared to last year, whereas the profitability has grown by over 100%. So the results have been absolutely tremendous in this quarter and even in the last quarter. But FY19 has not been great, and neither has been FY18. The PE of the company right now is at 9, which I feel is not quite very low, considering it is more or less a commodity ancillary play rather than, you could say, a consumer play, and that is where the difference is lying. Return on equity of only 8% is also not helping, although the operating profit margin is around 20-21%. So the interest cost has gone into eating into the operating profit, and eventually the net profit is not quite the same, and so the return on equity is not quite good enough. So the performance of the stock is down over 80% from its peak of 2018, and it is right now trading at 35 rupees. It was trading at around 190 rupees at its peak. The demand for lead products has slowed down. Why is that? This is because of the slowing down of the business here in India. So the major business comes from India and some from abroad, and across the globe the growth cycle has slowed down over the last couple of years, and that has really shown through in the numbers. Although the last two quarters have been good, but if we look at before that in FY18 and 19, things were really not good. I believe valuations are still expensive, although you'll think that only 9 times earnings it is trading at, so it is quite cheap. But I have seen such companies into commodity, whether it's oil or metals or sugar, paper, etc., which are into pure commodity play, where either they supply to other companies some product, or they are producing that for their own good, and a major business comes from that. These companies normally trade at valuations of, when the things are really tough, they trade at around 4 to 6 times. So trading at 9 times, so we could see more fall, but already the stock has fallen so much that we could see a stabilization of prices rather than a move up. So the tide started reversing from early part of 2018, and it has not, you could say, arrested yet. And we have seen the stock now going to 38. 38 is a very crucial level, and I'll discuss that in the technicals just in a few moments. But over the last two quarters, the results have been good, and if this continues, and probably the outlook looks good for lead, alumina, and other non-ferrous metals as well, then we could see a change in the stance of investors for the company. Why the stock has crashed, as I mentioned, reversal of lead prices is also led because lead at one point of time was very much in demand, and the prices had shot up. So they also increased the prices of the lead that they were taking out, and eventually making a larger profit to what Gravita was making, say, 4 or 5 years back. So that is one thing. Acceleration in raw material costs. Major raw material costs for such companies are is linked to oil, and the oil prices has gone gradually up from those 30 to 40 dollars a barrel in 2015-16 to what it is at around even $70 per barrel, $70 to $80 by 2018 end. And that's why we have seen a reversal in numbers in the last 2 quarters. The numbers have been fairly good because the oil prices has slowed down to around less than $60 per barrel. But other raw material costs has also increased for the company for production, and hence the numbers have not been really good. So bad results throughout 2018 and 19 meant that investors shied away from the company, and you add to that the mid and small cap slam dunk that we have seen over the last couple of years, then everybody would want to stay away from any small or mid cap company. And it is a complete reversal to what happened between 2015 to 2018, early part of 2018, where everybody was looking at small and mid cap stocks of the leading sectors. So this is not has not happened and over the last couple of years, and people have really ran away from investing in such companies which are not known. So, and the sector itself is out of favor. And when I mean by sector, then there are stocks such as you would say HEG and such companies, which is Philips Carbon, etc., which have not done anything glorious over the last couple of years, and we have seen how the wealth has got destructed in such companies, which have also been related to commodity play. So all this has meant that the stock is now dwindling at around 38 rupees. Looking at the technical, the 52-week low is 33 and 38 is a strong support, but the stock is trading at 38 at the moment. So if in the next few days it breaks 38, 37 levels, we could see when 33 go down, and we could see the stock trickle down to around 27, 28 rupees. So be careful in this. The 200 EMA of the stock is at 57, so it's far away, and that's why I feel that the stock is very weak on the charts, and we could see a major breakdown coming in the next week or two. The resistance, big resistance, is around the 42 to 45 levels. So let the stock cross these levels of 42, 45, and only then trade or invest. Otherwise, look for major declines and then look for the positivity in the future earnings to get into the stock. Although the promoter holding is 72%, and there is also a good amount of DII holding, that only 21% is with the retail investor. So that is a good thing with the stock. So what needs to be done? It is probably you can accumulate over the next 1.5 years, provided that the numbers remain same, in which the growth is over 60-70% on the profit front. Then even the PE would shrink, and then the stock would move higher. So take that into consideration. Wait for a turnaround in the sector and have a 5 to 7 year view. And this sector may test your patience like other sectors are doing in the mid and small cap section. So this was a video on Gravita India. Please like and subscribe my channel, hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.